Welcome back to Yahoo Finance Live. This morning, we are about 12 minutes into trade right now and taking a look at the major averages. We're up across the board here in the U.S. with the Dow, the S&P 500, and the Nasdaq all in positive territory. And that's much of what we're seeing around the world, too. Jared Blikre is at the Wi-Fi Interactive and has more on that. Jared?
That's right, and let's take a look here. We have a two-day rally underway, and we've seen a lot of these this year. But let's take a look at the instant scenario. Nasdaq up 5.81% over the last 2 days. Now, it was only last Thursday, that was 4 days ago, that morning that we hit that CPI number, opened up considerably lower and rallied strongly to close the day up. And let's take a look inside, not inside the market just yet, but a longer-term view. This is the S&P 500 over the last 3 months. I said we've seen these two-day rallies before. Well, how about this one off of those lows? Well, that was quickly reversed. What about this huge down day that we saw Friday? My point is that we have a lot of volatility. Positioning is low right now. Liquidity is terrible. So when we get these reports like CPI, we have huge amounts of money that want to reposition. They simply can't without moving the market in a big way. And so that's what we're seeing. Now, I want to point out something that's happening in the bond market. Most of the yield curve pretty quiet today. 10-year down 3 basis points, 30-year coming off of an 11-year high. That's up 1 basis point. But the 13-week T-bill, which tracks closely the short end of the curve, that's what the Fed is acting on. That is up another 13 basis points. Global Fund Manager Survey, Bank of America. You guys have been hitting that really hard this morning. I'm going to talk about this as we take a look at the U.S. dollar. A little bit down here, taking some pressure off of markets. But basically, the takeaway for me is that we have all the makings of a tradable bounce right now. Hartnett and team over there at B of A confirming that, or at least saying that. But is it the low? They don't think it's the low just yet. I want to point out something that's happened over the last 2 days. Consumer discretionary, that's XLY, that is up nearly 7%, over 6.5%, followed by real estate, tech, materials, financials, all of those outperforming. And it's been a great day for the Nasdaq 100 stocks, or a great week so far. We can see Tesla up almost 10%, Microsoft, Alphabet, Apple up over 5%, Nvidia up almost 9%. So we have the makings here of another nice bounce. Everything's all in right now, but is it going to be reversed over the coming days and weeks? We'll have to see. But the makings of a tradable bounce, it looks like we have that.